pressure. Hello?
Right then, good afternoon folks, and just another update from us at the end of another week of trading. We'll jump across to the calendar. We'll have a quick flick through the charts and when we get around to it a little bit later on, but you can see over the course of this week not a great deal of high impact data. Monday and Tuesday pretty quiet, as you can see. Started up on Wednesday with an inflation print out of the UK, now slightly higher than expected, which is not the way that markets had hoped that inflation in the UK would come down, but still a substantial decrease, certainly in terms of the yearly figure, from the previous figure of 10.1 down to 8.7 over the month of April in relation to the month of April from the year beforehand. Consensus 8.2, so slightly higher than expected and anticipated. So as I said, inflation not coming down the way that we would first hope, but we'll have a look across the cable when we get to the charts now in a minute. Now this IFO business climate, quite a good leading indicator for the DAX. Certainly when we look at it in terms of a bit longer term, over the course of the last 6 months, you can see the IFO business climate consensus 93, actual 91.7. You can see the uptrend across this for the last number of months: October, November, December, January, February, March and April, all ticking higher, and then we have pulled back slightly over the course of the month of May. Now if I just blow this chart up, you can see it. Once we come over here, back in here, this rally started back in October of last year, so that was rising business climate conditions, certainly in terms of that print over the course of the following 6 or 8 months. And then we come into this month with a slight bit of downside this week, probably driven by something else, but I think that has been a good leading indicator for the price of the DAX over the last 6 or 8 months. So it's definitely something we need to pay attention to if that continues to print lower. Right, 91.7 will be the number we'll look at next month, but certainly a bit of negativity about business conditions going forward into the coming period, which goes in line with, if I dial back this to medium impact data releases, and we'll come back to the GDP figures from Germany, which have entered a technical recession being 2 consecutive quarters of negative growth, which is exactly what we have seen. So the quarterly figure consensus was 0, minus 0.3. We'll come into this here in terms of the quarterly figure. Last 2 quarters, minus 0.5, minus 0.3, and that says that the Germans are in a recession, which, couple that with the IFO business climate, would probably say some negativity ahead for the DAX. Now if we come across into Thursday, some consumer confidence figures were lower than expected, so a lot of things stacking up against the Germans over the course of this week. But that brings us into today then, in terms of inflation out of the US. Now consensus 0.3, actual 0.4 in terms of the monthly figure for the core PCE. Now PCE is the Fed's preferred metric of inflation, and a slightly higher than anticipated print. 0.3 last month, 0.3 the month before, 0.4 this month, means inflation is still rising too high, and it means the Fed need to keep the foot on the gas. But that hasn't really given us too much price movement off the back of that. You can see some durable goods orders higher than expected, personal income in line with consensus but higher than previous month, personal spending 0.8 versus 0.4 above the previous of 0.1. So more durable goods orders, higher inflation, more people are making money and more people are spending money. So that is a recipe that the Fed need to keep the foot on the gas. But that brings us on to the charts. Then I'll have a look at what has gone on over the course of this week. Now you can see some substantial downside across these US indices over the course of Monday and Tuesday. Really, I suppose a little bit of upside on Monday, but really Tuesday and Wednesday, some solid downside on the S&P, some solid downside on the Nasdaq, some solid downside in the DAX, all off a reluctance from the US government to raise the debt ceiling. Now we have had some positivity out over the last 24 hours. Let's say they are closer to reaching an agreement. What they are actually going to include in that agreement obviously remains to be seen. They're speaking about increasing the defense spending by 3%, which, judging off it being the US defense expenditure being larger than the next 20 countries combined. Is that really needed in terms of raise the debt ceiling? I'm not quite so sure it does. They're going to remove 10 billion from the IRS's budget, and they're going to make that up in terms of kind of blocking some tax loopholes within the or clamping down on some tax loopholes within the country. So there's a couple of things that they still have to agree on, but it looks ever more likely that they will reach some sort of an agreement. Whether it's today, tomorrow, the next day, I don't know, but it should reach an agreement before that debt ceiling is breached, right? And the reaction to that has been negative stocks, positive dollar off the back of there not being an agreement. Now that they are coming towards some sort of an agreement, you'd have to expect stocks push higher, the dollar pushes lower, and that seems to be where the trades may be over the course of next week. But then where do you pair the dollar with? You look at cable, right? If we come back to the calendar and have a quick look at cable, you can see retail sales today higher than expected, inflation higher than expected, so some positive data out over the course of this week, higher than anticipated across the UK. So maybe that is a good idea to pair it with over the coming week ahead. Certainly if they raise the debt ceiling and come to that agreement, you should see probably some dollar downside off the back of that. So should see some stock upside. Both of those, with the correlations between asset classes, should prove supportive for sterling. If we continue to get positive data out of the UK, well, then that's maybe a reason to buy cable rather than anything else. But you can see DAX testing the highs now. You can see NASDAQ testing the highs, the S&P testing the highs. And the closer we get to an agreement, and when we actually do get an agreement, you'd have to expect that these stocks pop higher. And I think that's where you need to keep your eyes peeled over the coming week ahead. Which brings us on to the week ahead. And not a lot of data out, or say not a lot of data, no high impact data out over the course of Monday and Tuesday. Monday is a bank holiday, certainly in the UK, so there will be a lack of liquidity, low levels of volume within the markets on Monday, so just do keep an eye on that. But you can see over the course of Wednesday there's some inflation prints out of Europe. There's a manufacturing PMI out of China, which I think will be important. If you can get above consensus, that should prove supportive for stock indexes across the board, and we're looking for things to go in line with raising the ceiling on the debt limit, right? If manufacturing in the world's second largest economy, it gives us a positive upward surprise, goes in line with that debt ceiling raise, which then in turn should prove further upside, or should result in further upside across US indices, right? Into the next day, you can see the actual European inflation print. Does that really impact markets too much? I mean, it does in terms of the ECB, but does it really impact global markets? I'm not so sure. But high levels of inflation mean the ECB need to keep the foot on the gas, and if dollar sells off the back of what we've been just talking about, that is something that can go in line with that. You come around to NFP, the unemployment rate next week. If non-farm payrolls can rise, show unemployment rate is rising, which is expected to, that should be further negative for the dollar and should be further positive for risk assets across the board. So does that mean we get a clear risk on week next week? Obviously nothing is for certain, but if they do raise the debt ceiling limit and we get a couple of data points that work in our favor, could be a positive week next week for markets. But that's it from me then. I'm going to wrap it up there. Enjoy your long weekend. Obviously Monday, bank holiday in the UK, so obviously a few days off now to enjoy hopefully what will prove some nice weather. It's a nice day in London today. Hopefully that continues over the weekend. But that's it from me then. Enjoy your long weekend, and I'll speak to you again next week for another weekly market insights. Thank you.